Alright, so as you guys can clearly see, I lost every single trade I took this week. Now, before we go over the lessons I learned and what I can improve on next time, we'll just go over my full analysis for all of these trades. So yeah, let's get it. Alright, so this is the first trade we took on EU this week. I was targeting the 15-minute fair value gap down here, and I think we lost around $350, risking 1.2%. And now let's go over why I took this trade. So we're on the daily chart, and you can see that we took out this level of previous daily high buy-side liquidity. If we scroll down onto the 4-hour now, we can see that we have this nice fair value gap that I wanted to see price retrace into after going up and taking out the previous daily high. If we go onto the 1 hour now, here's where we can see just market structure where we're clearly making higher highs and higher lows. We're clearly inside of an uptrend. So if we wanted a more high probability trade, we should have just followed market structure and taken a long. We're on to the 15-minute now. This is where I started to look for my entry. So I was using session liquidity. So right here we had the Asian high. So we took out the Asian high, and then we took out the Asian low right here. Now I looked for my first entry after we took out the Asian high. We broke structure right here on the 15-minute, and then we had this big 15-minute fair value gap right here. So as soon as price wicked it full, I entered one position. And then if we scale down onto the 5-minute, we can see we entered right here. But also, if we look at this on a smaller time frame, we can see we have another 5-minute fair value gap up here. And then we could look at this whole area like a breaker block, because this was the low that was displaced past. So then I entered another position here with my stop loss at this high. And as you can clearly see, we got stopped out before we could target this 15-minute fair value gap. So what did I do wrong, or what could I do better to learn from and improving my mistakes? So number one, we need to follow market structure. Obviously the trend is your friend. As corny as that is, it is valid, and if you're looking to take trend extensions, you need less probabilities. And in this case, I was taking a trend reversal, so I needed much more probabilities than this for a high probability entry. So yeah, follow market structure for higher probability trades, which will give you better risk to rewards, which will give you bigger moves to the upside. So yeah, we should focus on taking trend extensions, not retracements. So if we come over here, if we had an uptrend right here, realistically you want to take the long right here, you want to buy right here, and take a long all the way to the upside. What I was doing was I was trading the retracement. So when it retraced back down to continue higher, I was trying to take a short off that instead of actually following the overall trend, which is bullish. So yeah, following market structure, following on taking trend extensions. Number two, identify concepts. So you can clearly see right here we have a Judah swing. So what is a Judah swing? Well, if you look at this range right here, inside of these boxes, pretend that this is Asian session. And if we draw out liquidity, we have Asian session high right here, and we have the Asian session low right here. So if price comes up and takes out the Asian high, and then takes out the Asian low, and that's called a bullish Judah swing, and you should take a long in the opposite direction. But if it was the opposite way, and price takes out the Asian low, and then it takes out the high, you would want to take a short in the opposite direction. So there's bullish and bearish Judah swings, but today unfortunately we had a bullish Judah swing, which we took out the Asian high, then we took out the Asian low, and then we continued higher. So realistically I should have realized. So yeah, that is the main two lessons I learned from this trade. Follow market structure, take trend extensions, not retracements, and identify concepts with your analysis like a Judah swing / don't trade after take profits have already been hit. Also, another thing I could have done is, with my trading plan, I like to take profits at 15-minute draws on liquidity. So I could have easily taken take profits at any of those white lines there, giving me still decent risk to rewards. This isn't a bad risk to reward, just taking a take profit there. And then I could have moved my stop loss to break even, making this a risk-free trade. So I definitely could have secured profits, definitely could have made money, but I don't know, maybe I just got greedy. I saw the big 4-hour fair value gap. I saw the way better risk to reward. So I wanted to target that instead of following the plan. So yeah, third thing, take profits and leave the markets. don't be greedy. Always take profits at potential reversal points. I should have realized here this could have been a potential reversal point, and you can literally see bullish market structure. We get an internal sweep right here, displacement past this high, so I should have known. And then yeah, always move your stop loss to break even after you've taken profits. So yeah, those are 3 things I should have done to become a better trader, and something I can learn from next time. Alright, let's get on to the next trade that we took. Alright, so this is how our second trade played out. As you can clearly see, we wanted to target this drawn liquidity, but we were fucking liquidity, bro. We got stopped out and then it hit my take profit. So on this trade, I only risked around 0.25, so I only lost $65, which isn't bad, but come on, bro. Prominent swing low, otherwise you're going to be liquidity. But yeah, another trade, I could have done a lot of things to maximize profits and just win in the market. But yeah, let's just go over why I took this trade. So starting out on the 4 hour, we had a similar bias to yesterday's trade. We took out the previous weekly high, and then realistically I should have known we wanted to target the 4 hour fair value gap. So I definitely did not have a high time frame buy. So there was a bunch of air rate, but basically I said we had a bearish bias because I thought price wanted to target the 4 hour fair value gap, but at the same time we could go up and sweep internal highs. It was trending bearish. So in hindsight, I shouldn't have even taken this trade, even though I would have won if I had a normal stop loss. I think what I saw for this trade was, even though we were bearish, we were holding this bullish optimal trading entry, and my thought was that we were going to go up and internally take out this high to create like a high time frame market, make a sell model. I thought we were going to go back up, take out the high, displace past the low, and then retrace. And that is what happened in hindsight, but like I said, we want to take trend extensions, not reversals. But yeah, we were holding an optimal trading entry, 79 points, so yeah. And then after that happened, I scaled down onto the 15. I'll just get rid of it here so you guys can see it clearly. But right here, as you can clearly see, we break structure to the upside, and then we're holding this 15-minute bullish fair value gap. So I'm like, cool, we can target these drawn liquidity. It does hit it, but fucking liquidity. So in hindsight, put your stop loss at this low. I scaled down onto the 5-minute as well, and I noticed that this fair value gap on the 5-minute was getting held. So yeah, as soon as price came into this 15-minute fair value gap, I actually scaled down onto the 1-minute from entry. I entered, but I don't know why I did this. I put my stop loss at this low. For some reason, I decided to put my stop loss at this low instead of here, saving myself 2.4 pips. Why am I trying to save myself 2.4 pips? I don't know. But yeah, put my stop loss here accidentally, and then became liquidity and then hit my take profit. So honestly, number one, I shouldn't have even taken this trade because I didn't really have a high time frame bias. Number two, let's just write down. The first thing I could have done was not trade without a high time frame bias. And then number two, so yeah, the second thing I should have done is have a looser stop loss / put my stop loss at the most recent swing low. If I had done so, if I had put it here instead of putting it here, it would have definitely hit my TP. So yeah, definitely focus on having your stop loss at the most recent swing low, which is right here, not just some random low, because it'll just save you from being liquidity. Even if it's going to save you from like losing like an extra 2 or 3 pips, in the long run it's not really worth it. It'll just give your trade more space to run, and if you have more space to run, it's got a higher chance of hitting your take profits. So yeah, realistically, this is a trade I shouldn't have taken because number one, high time frame bias was saying bearish. We literally took out this previous weekly high right here. I thought price was going to retrace, even though I did think we were going to make a market maker sell model by internally taking out the high, displacing past the low, and then retracing. I probably shouldn't have traded until we took out the high internally. So yeah, just be patient and then just don't trade low probability trades like this. But speaking about low probability trades, with the next trade we also take was another low probability trade, so let's get into that. Okay, so the next trade I took was actually in the same night after this trade played out. I literally revenge traded because I was just salty about losing that trade because I was literally fucking liquidity. So yeah, I entered right here and we got stopped out, and let's get into why we took this trade, why we shouldn't have taken this trade, and I think we lost around another $60 on this and risking another 0.25. So at least I de-risked, but definitely another trade I should not have taken. So if we scale out onto the 15, we saw what played out before, but what I saw again was we had a 15-minute break of this height right here. We were currently holding a 15-minute fair value gap right here. I then also saw this as sort of like a little silver bullet setup, because if we scale down onto the smaller time frames, we can see that this orange block right here is the high that it broke past. So we're holding a 15-minute fair value gap, we're holding a breaker block, we got internal liquidity right here, and we got a breaker structure past these highs right here. So I had a little silver bullet in mind, so I just entered after we hopped back onto the 5-minute, and you can clearly see that we broke structure on the 5-minute right here past this high. And then after we broke structure on the 5-minute, I was like, but yeah, after we broke structure on the 5-minute right here, we had a 1-minute fair value gap right here. I entered a long right here as soon as I tapped into it, had my stop loss at this low, and then we had my first take profit at this drawn liquidity up here, giving me a nice 1-to-1. I was like, cool, I'm gonna make all my money back and we're gonna be fine. But as you can clearly see, I got stopped out. So yeah, let's go over why I shouldn't have taken this trade and what I can learn from. So number one, don't revenge trade. So yeah, number one, don't revenge trade. You should at most take 1 to 2 trades a day. You can take two if it's super high probability and it's already like preempted that you said you wanted to see it play out. And like realistically, just focus on probabilities. Don't focus on making your money back. That's just going to build bad habits. Just focus on taking high probability trades that you're confident that follow the trading plan that you're confident that is going to hit a certain take profit. And yeah, just don't revenge trade. It's stupid. Number two, the thing is, we can clearly see what do we have right here, a 5-minute fair value gap. Now, even though I don't know if this fair value gap, yeah, okay, it gets hit, but yeah, as you guys can clearly see, you don't want to take trades with your stop loss above a confluence. Don't trade with anything below your stop loss because you're most likely going to get stop hunted. And just don't revenge trade, bro. There was no need for it. And yeah, let's go on to the next trade we took. Alright, so this is the next trade we took, and this is how it played out. And yeah, we lost $121 on this. So I was risking again another 0.5%. Had my stop loss at this high, and yeah, let's go over why I took this trade. Okay, if we go into the 1 hour, clearly see we have this level of buy side. And I thought, bro, we're gonna reverse off this level of buy side, but well, as you guys can clearly see. Bro, sometimes I just wonder, should I just change my strategy? I've thought of this new strategy. It's literally like, you get a coin, you flip it, and you just go 50-50, bro. Because like, in a case like this, bro, I could have made bread. I could have made fucking bread, bro. But unfortunately, I wasn't using coin strategy today. But yeah, for this trade, took out buy side liquidity, and we had this 79 fib. So I was like, cool, we're bouncing off the 79 fib. But took out buy side. I expect us to at least retrace into this big fat 1 hour fair value gap. So the most common mistake that I'm noticing that I'm making is I'm not following the trend. I need to follow the trend. Instead, I'm just like, bro, this is the trend, it's bullish, right? Instead of like taking along up the trend, what I'm doing is when it comes up, I'm looking to catch the retracements, especially into fair value gaps. I love catching retracements into fair value gaps. But that's all I'm doing, man. I'm catching the retracements into fair value gaps. I'm not even catching them. I'm just getting stopped out straight away. So yeah, but follow the trend and stop trying to catch retracements. That's the first thing I've learned today from this trade, without even going into deeper analysis. I'm not saying that you should never take retracement trades, but if you want to look for the most high probability entries possible, follow the fucking trend. I do like taking retracements sometimes. I noticed that they can be pretty clean and efficient. But yeah, to get into the nitty gritty, we were targeting this 1 hour fair value gap. I noticed that we had a 15-minute break to the downside right here. And then on the 5-minute, I think I entered around here when price came into this fair value gap. Gets disrespected. I had my stop loss at this high, almost got stopped out instantly. And yeah, well, okay, here's the thing. This is why it's like, you got to think about it, because the last trade I took, I said, don't put your stop loss up here. Now, if I put my stop loss up here, I would have lost way more. Not if I kept the same position sizing, or if I like calculated the position sizing to be different, but yeah, I don't know why I took this trade. Once again, just not following the trend, not following high time frame confluences. Also, I do just want to point out, I should just not be trading this. This is when I should just be practicing my discipline and just practice just abstaining from the markets, just not trading, just watching to see what happens. Because if you're not given a high probability trade, you shouldn't really enter the market. You should just watch it and see how it plays out. Because even if it did take even if this trade did hit my take profit, it wouldn't have been a good trade to enter. So yeah, don't trade, just watch. Coming into the last trade of this week, it was on EU once again, and I lost around 1%, $250. But you may be wondering, bro, this looks like a hit your TP. This looks like a decent trade. Well, let's go over my analysis, because I actually think this was genuinely a good probability trade, but there obviously were a few things that I did wrong which did cause me to lose. So yeah, let's get into it. Let's just get into my bias on the high time frame. So we actually had a good bias in my opinion. So we're on the daily chart right now. I can see that we clearly broke structure to the upside on the daily right here. If we come onto the 4 hour, we see the daily break structure is very nice. We see we have a nice 4 hour break right here. We see that we're also holding a nice big fat 4 hour fair value gap right here. But unfortunately in this trade we have a 4 hour fair value gap right here and a 4 hour fair value gap right here. So realistically, probably shouldn't have traded with these confluences below our stop loss. If we scale down onto the 1 hour now, I was looking for a 1 hour break fake out, so I wanted to see price close above the red line on this white candle right here, but it didn't. So unfortunately the 1 hour did break structure to the downside. But if we scale onto the 15, this is where the model actually starts to come in. So we have a 4 hour fair value gap, we have this level of sell side liquidity which gets taken out, and then we also have the Asian high which I wanted to target up here. So yeah, we took out the Asian low, we took out sell side liquidity. You can clearly see right here that we broke structure on the 15 minute to the upside. I then scale in, I can see clearly right here that we have an internal sweep of this low, and then we also have a 1 minute fair value gap right here. So we have a valid market maker buy model, as well as I counted something in called the true open. So price opened right here at 9 p.m. So my first entry, I entered 0.5% on this, when it first initially came into the 1 minute fair value gap, stop loss at this low. And then I entered a second position when it came into the true open with my stop loss at this low again. So my first take profit was at this 15-minute draw. And you may be wondering, bro, you literally have a 5 minute fair value gap right here. Why didn't you take profit, bro? You still would have got good risk to reward. You still would have got a 1 to 4 and a 1 to 1. That's good risk to reward. I can't lie, boys. I don't know why. I think I got greedy. I don't know why the fuck I didn't take profits. But as you guys can clearly see, we hit our first take profit. We would have got stopped out at break even, so we would have made money, got out of the markets. But then what happens, bro? Targets that fair value gap that we were talking about. And then if we check news, we had news at 2 a.m. or to 4 a.m. As soon as it hits like 2 a.m, bro, look what happens. News, you get a big dump to the downside for news. And then it hits my TP of buy side liquidity. I remember I went to sleep, I put my stop loss at the low that I talked about, and I put my take profit all the way up at buy side liquidity. That would have made me all my money back for the week. So I was just like, go big, go home, hit buy side, and we'll be positive on the week. But nah, price wanted to come down, fill that 4 hour fair value gap, manipulate, and then fill their own longs, and then hit TP. So yeah, even though I had a high probability trade and a decent setup in my opinion, as well as if you look at it like power of 3, accumulation right here, manipulation of the low of the 4 hour fair value gap, I expected price to distribute, but New York just wanted to manipulate one more time. So ultimately I got fucking destroyed. So yeah, we'll go over what we learned. So what I learned for this trade, don't trade. So number 1, don't trade with confluences below your stop loss, especially if they're high time frame fair value gaps like this 4 hour one. Number 2, don't trade without 1 hour confluence. So as you guys can clearly see, we literally broke structure right here to the downside, and that possibly could have played into effect on why we lost. But yeah, you shouldn't really trade if you got 1 hour confluence in the opposite direction. And then third thing, don't trade before news, especially if it's high impact. You really don't want to trade before high impact news, because shit like this will just happen. You get stopped out and it'll hit your TP, so it's not good. So yeah, those are the 3 things that I learned from this trade. Don't trade before news, don't trade without 1 hour confluence, got a 1 hour break right there, and don't trade with these big 4 hour fair value gaps below stop loss. But other than that, I actually think it was a decent trade. We were following high time frame market structure. We had high time frame breaker structures going to the upside. It's just unfortunate that number 4, take partials at any confluence. So yeah, I should have taken partials at that 5 minute fair value gap, moved my stop loss to break even, but unfortunately we got fucked. So there's not much we can do about that. But yeah, maybe I shouldn't have traded. Me personally, I think it was a decent trade, but yeah, definitely a lot to learn from. Alrighty, so if we go over literally everything that I learned from this week, the mistakes I made and what we can do next time. First things first, follow market structure. You're going to take trend extensions, not retracements. This will just give you better probability trades. Number 2, do better analysis. You should identify that was a Judas swing, and you don't really want to trade after take profits if you hit. Take profits and leave the markets. This happened twice. There are 2 times this week where I could have taken take profits, moved my stop loss, and just left the market, bro. Taken my money, and I would have made some money. You don't need to fucking get greedy and lose bread to the market. You want to get your bread, get the fuck out, and then just go to sleep, bro. Don't trade without a high time frame bias / a high time frame breaker structure. Trend is your friend. Yeah, that happened 2 times. 2 times we didn't have a high time frame breaker structure in our direction. We should have had a looser stop loss in 2 trades, so our trades had a little bit more space to run. We should not have revenge traded. We should not have traded with fair value gaps below stop loss. That happened 2 times. So all the things that have 2 times, not even all the things. Everything on here we should just try to cut out of like our trading plan. Like the next week when I'm trading, I should just, like, if any of these are ticked, bro, just don't trade. And then obviously, yeah, don't trade before news. But yeah, next week we've got a bunch of high impact news, so I don't even know if I'm going to trade. We've got all of this shit, so you might have to just watch the markets, practice your discipline. But yeah, that's everything I learned this week. That's all the trades I took this week. And yeah, that's the end of the videos. Hopefully you guys enjoyed it, and I'll see you guys later. Peace. Alright, boys, so that is the end of the video. I'm actually kind of grateful I lost all of these trades this week, so it gave me like, it forced me to look deeper into it so I could actually look over my losses and identify what I was losing. Because even though I could have won these trades, a few of these trades this week, that would have just built bad habits for me. And like, I feel like if I won, I wouldn't really care. I'd just be like, yo, I won. It doesn't matter like what I did wrong, what I did right. All I did was, it doesn't matter because I just won. But like, losing these trades has actually helped me like become a better trader and identify what I should look for in the future to just be a better trader. But yeah, that is the end of the video, guys. Thank you all for watching, and God bless you. I'll see you guys later.